We talked about Photronics, Amkor, and Tower Semiconductor this week in the light of it being seemingly cheap semiconductor stocks. How would you rank those three stocks at this point?
I think that's
Okay.
reasonable. We need to go check this out. And we need footage to show the people on the show.
Only if the people want it. Welcome back. Today, we are going to focus on two more companies. One is Tower Semiconductor, and that one we also find to be reasonably priced. We just did a video on two cheap stocks, if you haven't watched that yet, on Amkor and Photronics, but this one is supplemental to that. And then we're going to talk about a fun sort of semiconductor company that Nick has been digging up here recently. Also, you may notice that we're now on the same screen, so we're having some technical difficulties. Please bear with us. We still want to crank out this content for you and get this information out to you in a timely fashion. So unfortunately, this is not the best setup, but we hope that you find the information useful. Before we jump into our semiconductor stocks today, Nick is going to tell us a little bit about why we have had such a large pullback in the stock market.
Yes. Maybe I'll first mention, we look ridiculous. We're both wearing basically the same shirt. Sorry, folks. Technical difficulties while traveling on the road. Anyways, stock market pullback the last 2 months. First of all, congrats to all of you. We've noticed the engagement has actually remained quite high the last 2 months, which means we think a lot of you fellow long-term investors are sticking with it and continuing to look for quality long-term businesses you can invest in. Good job on that, because as you probably know, Kasey and I believe that we are actually in a new bull market, but it's been a few years since we've had a bull market at this point, and maybe it's the memory has faded that there are actually, in fact, these brutal periods with pullbacks that get heightened by media latching on to whatever, the latest bit of noise to keep us all glued to the TV or the computer, and so they can keep making ad revenue. Interest rates are back up again, which, a reminder from last year, higher interest rates is like a weight on stock values whenever you're doing some sort of time value of money calculation. The Fed keeps messing with interest rates and saying they're going to be higher for longer, which has caused the 10-year to go up to 4.5%. It seems like recession is the word of the day. Political dysfunction, maybe a bit more so than usual. You name it, all sorts of stuff going on. But remember, at the end of the day, if you're a long-term investor, all you really need to worry about is if the companies you're invested in are growing their earnings and have the potential to continue growing their earnings. So most everything we cover here, it appears it's back in earnings growth mode again. Chip stocks, the earnings recession is in the rearview mirror for most of those, or it will be as we head into calendar year 2024. So thanks for sticking with us, folks. Good job.
Okay, let's move into Tower Semiconductor. And we did briefly talk about this company a couple of times through the lens that Intel was trying to acquire Tower Semiconductor, which is based in Israel. So, Nick, maybe you can explain to us first why the deal didn't go through with Intel, and then what's going to happen with Tower Semiconductor going forward.
Yeah, the deal fell through. Pretty simple. Basically, Intel had announced it was going to make the acquisition first half of 2022, and it expired. Chinese regulators dragged their feet on it, and so ultimately Intel scrapped the deal, and Tower is going to remain an independent business, ready to forge its own path forward.
So let's briefly just run through the existing fabs that Tower has. They have one 150 millimeter fab and one 200 millimeter fab located in Israel. That's where they're headquartered. Two 200 millimeter fabs in Newport Beach, California, and then San Antonio, Texas, both in the United States. And then two 200 millimeter fabs and one 300 millimeter fab through a joint partnership with Panasonic Semiconductor located in Japan. After Intel scrapped the plan to acquire Tower Semiconductor, they now have a new partnership with them to have a new fabrication facility outside of Albuquerque, New Mexico. What will that partnership provide to not only Tower Semiconductor, but also to Intel?
Yeah, this is an interesting bit of news that kind of drew our interest back in on Tower Semiconductor. So, and yeah, we've talked a lot about Intel and particularly my beef with it in the last couple of years. But this deal between Intel and Tower is really interesting because Intel actually has this existing facility in Albuquerque, and Tower is going to bring $300 million to the table. So Intel gets cash. And what that cash is going to be used for is for equipment, semiconductor manufacturing equipment. And that will support some new manufacturing lines that Tower wants within the United States. So it's going to boost their production in the US, and it's going to be specifically for US based customers. So these might be automakers, it might be something having to do with defense contracts, who knows? But this is, again, just a reminder, Tower is a specialty analog chip manufacturer. So you might have like your global foundries that does massive amounts of chips, and they partner with companies, and these are maybe mainstream chips. Tower is a specialty firm. So specialty sensors, specialty power applications. And so again, this is probably looking like maybe something for the automotive market, let's say, in support of their customers in the US. So a pretty good deal. Intel gets cash, and Tower gets access to a much cheaper fab expansion, going with a shell that's already been built, than if they were to like break ground on something brand new. And that bill would be perhaps $1 billion or more. So this is a nice asset light, I guess you could call it, deal between Intel and Tower.
Yeah, absolutely. That makes a lot of sense. $300 million is not chump change, but it's certainly a lot more than, as Nick said, building a new fab, purchasing all that equipment, and building the facility. So it's possibly a very good investment for Tower Semiconductor. Let's talk about Tower Semiconductor's financials for a moment here. On the balance sheet, Tower has $494 million in cash and short-term equivalents, and then $220 million in debt. Nick, maybe we can talk about the valuation now for Tower.
Yeah, the balance sheet looks good. Again, this is a nice $300 million deal that I think should keep that balance sheet pretty well intact for Tower. As far as valuation goes, so after it became increasingly obvious that Intel was not going to be able to pull off the acquisition, the stock price has plummeted. It's down almost 50% from where it was this time last year. And most of that decline has come just in the last few months. We're sitting at currently, as we record this, $24 per share, which makes for an interesting valuation discussion because on a free cash flow basis, Tower has dipped into slightly negative territory. Over the last trailing 12-month reported period, Tower has about negative $27 million in free cash flow. However, they are still reporting positive net income. And on a PE ratio, a trailing 12-month price to earnings basis, the stock is trading for just under 10 times GAAP net income. The difference between that is it looks like twofold: paying money to expand in various markets, retrofitting existing fabs with more equipment, but the manufacturing decline. Tower's been hit like everybody else in the semiconductor manufacturing space in the last year due to the excess inventory of chips. And so it looks like by a trailing 12-month earnings basis, the stock is really cheap. Free cash flow is negative, though. That will probably improve going forward. So again, this stock looks cheap. Is it really, though? I think that's the question at this point, right, Kasey?
Yeah, Nick, I absolutely agree. At this point, we don't have any forward guidance from management, so it's something that we're just going to have to monitor, it seems like to me, but very possibly something that we will add to our portfolio.
Yeah, I think what we want to do for us personally at this point is we're looking to see what the third quarter earnings results are. And more specifically, we want to see what management's guidance is going forward. So, whenever a company is going to be acquired, management ceases to give forward guidance and they tend to not have earnings call updates. So, that's what was going on while the Intel acquisition was pending. Now that's off the table. We're anxious to see what Tower has to say. And we want to see if they basically can confirm the same things we've been hearing from everyone else in chip making world. If 2024 is looking up for the company. That's what we're waiting to see at this point, to get confirmation that this is indeed a cheap stock that has been unfairly punished.
So we talked about Photronics, Amkor, and Tower Semiconductor this week in the light of it being seemingly cheap semiconductor stocks. How would you rank those three stocks at this point?
Good question. So we discussed this a bit, and here's our ranking. Again, this is for us personally. Kasey, I think maybe this will be a bit surprising because you probably all know that we like semiconductor manufacturing equipment just because of the critical choke point that they harbor in the industry. We're actually going to put Tower Semiconductor first on our list. We like its positioning as a specialty fab. We like this deal with Intel. And the stock, again, we're waiting to see what happens, but we think it really could be an absolute steal of a deal. Photronics, I think we're ultimately going second with this one. It also looks very cheap, but as we discussed on the last video, it's a specialty equipment maker. It only makes photomasks. They don't make the machines that print the photomasks, so they're reliant on some other companies for that machinery, like IMS Nanofabrication, which is a wholly owned subsidiary of Intel. And so we're a little bit slightly worried about boom bust cycles if we were going to make Photronics a long-term investment. So we're going to stick that one in second place. And then third, I think we've kind of come to this agreement that Amkor is pretty cheap, but it looks like a trade, like a shorter term swing trade to us because the business is so cyclical. There's some things about Amkor that we like. We like that there's cash and short-term investments over and above debt on the balance sheet, which is a nice thing for a manufacturer, an outsourced semiconductor assembly and test company like Amkor. But I think we just ultimately have concerns about that business model and the competitive landscape that tends to keep a lid on operating profit margins for those types of businesses. So that's our ranking. I think we're going to go with Tower, Photronics in second, and then in third place, Amkor.
Let's talk about a fun venue that is a bit of a chip stock. Recently, we were driving through the area and saw the Sphere in Las Vegas from the highway. And so Nick has been doing a little bit of research on that company. And so maybe you can give us a rundown. I didn't even know this was a public company. So tell us about the Sphere in Las Vegas.
Yeah, this is something, Kasey, I've wrote about this numerous times. We've talked about it over the years, and it just kind of fell off of the radar. But you probably saw in the news, the Sphere is open for business. They cut ribbon and had a U2 concert, which is kicking off a residency for U2 in Vegas. So that's cool. This thing is absolutely mind-bogglingly cool technology in the form of, as you said, Kasey, a giant venue on the Las Vegas Strip attached to the Venetian.
At first, I was a little confused as to why we would consider a amphitheater a chip stock. So tell us why.
Okay, it's not really a chip stock. Is it a tech real estate business? Absolutely. It is definitely tech real estate. And this place is so full of semiconductors that really, let's just say, you couldn't have anything like it without the level of silicon crammed into this. Just a few statistics I'll rattle off that you can actually find all over the media before we delve into some deeper stuff that we found interesting in the annual report for Sphere Entertainment. So this thing is encased in giant LED screens, 580,000 square feet of LED screen on the outside, to be specific. It can be programmed for stunning visuals, which means, of course, advertising revenue. But then on the inside, that's where the actual experiences happen. 160,000 square feet of LED screens. It's a planetarium-style wraparound screen. There's a stage at the bottom where performers are, and these interior screens are in 16K ultra-high def, which is double the 8K that you can get at your local Best Buy, which in of itself, an 8K TV is ridiculously expensive. In addition to that, there's thousands of speakers, and 10,000 of the venue's nearly 19,000 seats have this haptic sound that transmit the feeling of the bass through your feet and through your chair. There's also changing scents, temperature, wind to create these environmental effects. Pretty crazy technology. Can we go? Can we check out a show?
Well, I would like to, but I believe that I read that the tickets for most concerts were in the hundreds of dollars. So I don't know.
That's nothing.
It's got to be worth it. Like really, really worth it. I don't know. If maybe Garth Brooks starts playing there, I'll be in.
For starters, we can go see Darren Aronofsky's new film. I think it's called Postcard from Earth, and those tickets start at $50 a pop. I think that's reasonable. Okay. We need to go check this out, and we need footage to show the people on the show.
Only if the people want it.
Okay. Another interesting thing here, besides concerts, movies, there's also going to be shows and other specific content that Sphere Entertainment will help develop for this venue. And then also sports. Various sporting events will be hosted here as well. That's really important. We're going to talk about why that's important here in a moment to the business model. That's the tech, right? Let's talk about the business model, because that's really where things get a little more real, because there's a lot of hype going on with the stock. It's up 30% just in the last few months on the mind-boggling experience that people are having here, and they're discovering that you can invest in it. So let's talk about some of the reasons why you should not invest in Sphere Entertainment before we give our final take. So Kasey, first, there's some other publicly traded stock associations with Sphere Entertainment. What are they? You want to rattle those off?
The Sphere was part of the Madison Square Garden Company up until they broke ground in 2018. And now that empire is divided into multiple businesses. Besides Sphere Entertainment, there's MSG Sports, Madison Square Garden Sports, which owns the New York Knicks and the NHL's New York Rangers. And then there's also MSG Entertainment, which is the holding company for Madison Square Garden itself, as well as the Chicago Theater, Beacon Theater, and then Radio City Music Hall. Super
confusing. There's a third one, and it's actually still part of Sphere Entertainment. It's called MSG Networks, Madison Square Garden Networks. That's the media and TV distribution for basically the sports teams. It's a regional sports network. That's actually what's making up all of the revenue. That was all of the revenue for Sphere Entertainment, not the actual real estate property on the Vegas Strip, but MSG Network. So all of the $574 million in revenue in fiscal 2023, that's the 12 months ended in June 2023, basically all of that was MSG Network. It basically offset the operating losses for building the actual property itself. So MSG Network, operating income of $96.5 million, which offset the $370 million operating loss from the Sphere in fiscal 2023. So you're kind of investing in the Sphere if you buy Sphere Entertainment, but you're kind of also investing in MSG Network, which is a sports media business, and it's a no-growth business. They have about $3 billion in commitments and media commitments over the long term. It's an off-balance sheet commitment that you have to dig out of the annual report. but that'll be realized over the very, very long term. It's basically just assume this is a low or no growth or maybe even slight decline depending on the year. And advertising, that's not a super valuable business. Other than that, it's going to kick in some cash for the Sphere until it ramps up.
Okay. So those are the financials. Let's talk a little bit more about those risks. And Nick, I know that you picked out 3 things in the 10K that were super interesting. Let's also talk about its partnership with the Venetian. This is actually pretty important, I think. What is the drawback of being partnered with the Venetian?
Right. So maybe first I'll lead off with this, Kasey. As of this recording, Sphere Entertainment just shy of $40 per share, market cap of 1.3 billion, which is less than the 2.3 billion it took to construct this giant piece of silicon, or at least a building completely encased in silicon with those LED screens. So that's what's intriguing, I think, to us. Maybe it's a really cheap stock if the Sphere can ramp up some revenue very quickly and start breaking even, at the very least, not lose $400 million per year in operating losses. Okay, so you mentioned the Venetian, which is actually at this point now operated by Apollo Management, the big private equity company, ticker symbol APO. That's who owns the Venetian. And there's a 50-year lease on the land for the Sphere. And it's a variable rent. If you look in the 10K, they call it a variable rent. And after certain operating and financial metrics are met, the Venetian is entitled to 25% of the cash flows generated from the Sphere. Variable rent, that sounds like a win for Apollo. The really savvy folks at Apollo that tend to strike deals that are very favorable for themselves and oftentimes not so favorable for the companies they are striking these deals with.
Mm-hmm.
So I think that's the big risk. Once the Sphere ramps up its revenue, now what? Who's actually going to get the biggest cut? Who's going to get the biggest cut of profit for the lowest risk? And I'm thinking it's probably not going to be the Sphere, the way it looks from this deal.
Okay.
Kasey, you had also asked me, is the Sphere in Vegas the only property this company owns?
Yes. I thought this was really interesting. They have land in London at this point, but there is no date exactly when they're going to break ground on a similar amphitheater in London. They also have one in Burbank, California, which sounds like kind of like a test ground, is basically what it sounds like to me. But ultimately, neither of those things are generating anything at this point. Obviously, not the one that's not been built yet, but the one in Burbank is not generating any revenue at this point. So the only thing that's generating revenue, the way I understand it, is the Sphere in Las Vegas.
Or will be generating revenue.
Right.
Yeah, this is interesting. It's called Big Dome, the one in Burbank. It's a screen, 25% of the size of the Sphere in Vegas. And it looks like a place for them to develop and test content. So I don't know, maybe perhaps this could be a revenue generator, because Sphere Entertainment a couple of years back acquired 2 small businesses. One was an LED screen business and the other was an audio company. Both tech companies, and they fused them together to create this cohesive audio-visual experience. Maybe they can strike like some content creation deals or some, I don't know. I'm sure there's a way that they could generate revenue from this Big Dome in Burbank. But at this point, I think you're right, Kasey. We need to assume the Sphere in Vegas is the only income generating property for this business, at least if you remove MSG Networks from the equation, if we're looking at this as a pure tech real estate investment.
Okay, so the first 2 risks, we have the financial risks involved with this, and then the second risk, the expansion project in London, we don't know when exactly that is going to happen. James Dolan, the CEO and controlling shareholder, did hint at a possible franchise model for these other spheres, either here in the US or possibly abroad, which could be lucrative for shareholders, but at this point, there's no date for that. So cash flows are being completely relied upon from that MSG network, sports and media rights. So those are the first two risks. Nick, what is the third risk?
You already named it. Literally. James Dolan is the CEO, and the Dolan family, they're the controlling shareholder of Sphere Entertainment. And we've covered this in other videos. Specifically, what comes to my mind is when we said that we were going to exit, ended up being a brief round trip in SentinelOne, the cybersecurity stock, because the controlling shareholders were private equity and they do not have the same long-term goals as us, as individual investors. This is probably the case with the Dolan family as well, the controlling shareholders. Kasey, do you know who the Dolan family is? James Dolan in particular?
Yes, I have heard of the Dolan family. I've heard a lot of fans don't care much for them.
Yeah, let me give you a hint. I think there's a lot of New York Knicks fans that do not like James Dolan. Kind of a controversial figure and blamed for the team's multi-decade poor performance streak, I guess you could call it. Hey, they're back on track, though, the last couple of years, which is good for the Dolan family's other investments, MSG Sports, MSG Entertainment, and also AMC Networks. So the Dolan family, that's where a lot of the fortune came from, is from AMC Networks, not the movie theater chain, but the cable TV channels. Another risk involved with this is the boards of directors and management teams are kind of like shared across all of these businesses. James Dolan reshuffled a lot of these assets over the last few years, a lot of it having to do with getting the financial assets lined up to build the $2.3 billion Sphere project in Vegas. But yeah, I think that's actually the biggest risk. The Dolan family, a lot of their wealth is tied up with this, and they are the controlling shareholders. They own the majority of the votes for making big decisions with Sphere Entertainment, and that can oftentimes be problematic for individual retail investors if they come up with ways to generate wealth for themselves that doesn't also necessarily benefit the common shareholder.
So with all that being said, I think it's still a really interesting company. Are we going to be purchasing any shares for our portfolio?
I think so. But I think I need to get you to the venue to check out the Darren Aronofsky film first before you're fully on board, right?
That's true.
Okay, folks, maybe we'll just do a recap of the small cap stock investment methodology. This is definitely a small cap stock. Again, 1.3 billion market cap right now, with the stock at just shy of $40 per share. When we make small cap investments, we do it in a basket. There's usually 25 or more of these things. And when we make a small cap stock investment, we assume we're not going to make any money because those are the odds. You're going to lose to the market. Like any small cap business, there's a lot of risk involved with Sphere Entertainment. Cut through the hype. It's an amazing property. By all accounts, it looks incredible. It's like a giant semiconductor incarnated in a piece of real estate. Pretty cool stuff. But I think we're going to make a small nibble on this and then maybe see what happens from there. Very small nibble.
Okay, in the last two videos, we have talked about several small cap, small semiconductor stocks. We have Amkor Technology, Photronics, Tower Semiconductor, and Sphere Entertainment Group. Our next video will be 3 stocks that we are definitely buying in October this year, 2023. So make sure you subscribe and stay tuned for that video coming up. And thanks for bearing with us here on Chip Stock Roadshow. And we will see you all again very soon here at Chip Stock Investor.